It usually takes about 6 to 7 years to reach break-even point, and then the once cheaper option becomes the more expensive one. Hi guys, Kobus Kühn here. I'm a certified financial planner, and lately I've had a few requests asking me why does insurance premiums increase so rapidly over time? So I thought I'd make a video just to explain to you how premium patterns work to better equip you next time you look at your life insurance. When it comes to premium patterns, there's basically three main different premium patterns. The first one being a non-compulsory premium pattern, also referred to as a level premium. Number two is a compulsory premium pattern with a fixed percentage. And number three is an age-related premium pattern, which also falls under the compulsory premium patterns. In terms of pricing, the first one's going to be the more expensive option. And the reason for this is that you've got more control over your premium increases. With this option, your premium won't automatically increase every year. In fact, it can stay the same for the rest of your life. The same cannot be said for the compulsory side of premium increases. They start off much cheaper but become more expensive as time passes. And the reason for this is that your premium will escalate every year while your cover still stays the same. Depending on the option you chose, if you chose number two, the compulsory premium increase with a fixed percentage, your premium will escalate with a fixed percentage. If you chose the age-related compulsory increase, your premium will escalate according to your age. Now this is very difficult to determine because each company has their own system to determine what the premium increase will be according to your age. If you either chose a compulsory premium increase with a fixed percentage or an age-related one, the sad thing is that you can't stop the premium increase. It usually takes about 6 to 7 years to reach break-even point, and then the once cheaper option becomes the more expensive one. Now you might ask the question, wouldn't it be better to go for the cheaper option for the first 6 to 7 years and then switch it over? That would have been nice if it was possible, but the thing is, after 6 to 7 years, the level premium is not going to be the same as 6 to 7 years ago. And you'll actually have to reapply for cover, as you would have gotten older and your health might have deteriorated, making it very difficult to apply for new cover. Keep in mind that with all three of these, you can still choose that your cover escalates every year. The insurer will obviously not give you cover for free, so if you do choose the option to increase your cover, your premium will increase accordingly. If you have a compulsory premium increase, your premium will increase with an additional percentage. I think it might be easier if I just show you an example. Have a look. Okay, let's suggest you take out cover of 1 million. If we look at the premium graph, the level cover will start off more expensive. So let's say your level cover costs you 1,000 Rand per month for 1 million Rand. Now the level cover's premium will stay 1,000 Rand throughout your life. Whereas a compulsory premium will start off a little bit cheaper, let's say 650, but as time passes, it will become more expensive because your premium escalates every year with a fixed percentage. With both of these options, level, compulsory, cover, premium. On the level premium, if you say the cover should not escalate and stay the same every year, your premium is not going to escalate. If you do say you want your cover to escalate every year, your cover will escalate with 5%, for example, and your premium will escalate with 5%. On the compulsory side, if you say keep my cover the same, your premium will escalate with a fixed percentage. If you say you want your cover to escalate on the compulsory side, for example with 5%, your premium will escalate with 5% as it's supposed to, plus because you're getting more cover, you're going to pay extra for that as suggested here. In other words, your cover will escalate much more aggressively. You can't stop this premium increase. Now it might seem like the logical choice to go for the non-compulsory or the level increase, but there's actually a place for both. Now bear with me, the reason I say this is that with a compulsory premium increase, your premium is actually cheaper for the first 6 to 7 years. Now let's suggest a bank requires security on a new loan, and that loan is only valid for a period of 10 years. This means that your premiums will actually be cheaper for the first 6 to 7 years. If you look at the total premiums paid during a 10-year period on a compulsory premium, your total premiums might be lower on a compulsory premium. But the fact of the matter is that you'll usually require cover after that as well. And if you want to switch it over after 6 to 7 years, it might be very difficult to do so. Especially if we look long term. Think about it. If you're in retirement, you actually want to lower your expenses and not increase. And if you've got a compulsory premium increase over the long term, it might get out of hand. You might be in a situation later on where you need to start cancelling policies just to keep your head above water, because those compulsory premium increases just get out of hand. And that's why the non-compulsory or the level premium is your better option. Well, that's it for today. If you have any questions, let me know in the comment section below. I hope that you enjoyed this video. Don't forget to leave a like, share it and subscribe. Otherwise, I'll see you soon.
Thank you!